that's a kind of a fun point that has nothing to do with accounting, really. But when I hear it a lot of times from people that like civilians, non-business owners, right? Like they're like, oh, I would love to own a business. How do you find out about these kind of things? Because every deal that I have ever done has come through word of mouth, like people that I know or are connected with in some way. I've never went to a broker and bought a business. I've never sold a business that way. And not that they're not useful, but I think a lot of deals are done just by putting it out there that you want to buy something, and then on the other hand, putting it out there that you might be willing to sell, and allowing people like your CPAs, your CFOs, like
Yeah.
letting those people connect you, because networks are huge when it comes to this. And then it allows for a level of comfort, and there's at least somebody that's somewhat, a referral source that can kind of vouch for the people that you're being connected with.
I think
Oh,
I
100%.
think there's value in using a broker if you have a very niche specific business.
Yeah.
Like I can think of one that where they've made it very clear that they want to do that, and it's like the business is so unique to like the gentleman who kind of owns it. It can be replicated, but he just like he knows what they sell and how to make it, and he needs to get that to someone else to be able to do. But in that one, I was transparent. I said, I think we need to reach out to. There's a broker that we've worked with in Northeast Florida who I think is really she's good at what she does, and we prefaced and said this is just so unique. It's going to require some a different level, and the value that a broker brings is they've got sellers that are or buyers that are ready to do that thing, and they just want to find a business that meets the objectives of whether it's cash flow or passive income, non-passive income. So in that situation, it will be beneficial to this group to use her because she's just got a different pool of resources that we just don't have. But then I think what you just said, Jen, of letting your advisor group know this is what I want to do. And, we get the luxury of working with a lot of really good people and businesses that just may be a natural referral, or it may be something that takes some time, but you have to make those objectives known to your people that you trust and you work with for sure.
So, Drew, you mentioned earlier that you bought into a business.
Loosely use the word bought.
You did.
Yeah. I mean, yeah. You want me to explain it a little bit? Go through.
Yeah, tell us about, well, first of all, we already found out that, you were somewhat forced, but not forced. Did you do any due diligence to make sure that you wanted to work with your brother?
The only due diligence I had to do was convincing my wife that it was a good idea, like Micah said, to get in business with family, because also our father's one word of advice was like, don't ever work with your spouse. And so like the next closest thing would be your older brother, right? And so I think we talked through that more so than like the numbers or anything like that. Like it was like, do you want to extend yourself and just be susceptible to like bad things happening in business? Like we deal with uncomfortable situations, and we have to make sure that we separate like business from family. And we do a good job of it so far. And I've not once second guessed it. There's only a few things in my life that I've not second guessed, and that's one of them. But I would say on my side, it was a little bit different whereas like Mike and Tyler had been going since October of 2018, and Micah basically told me, he let me get through my honeymoon, and then I came back to the office, and he was like, hey, you want to go get lunch? And then and I'm pretty sure it was lunch, having coffee. He was like, hey, Tyler and I are leaving, and we're doing our own firm. And I was like, okay, I don't want to stay here without you guys. Like it was fun because we had a fun group, not necessarily because of the overall culture. There was good things about it, and I learned a tremendous amount.
Oh,
but I was
for
like,
sure. Those guys were wonderful.
Oh yeah. But I definitely was like, I mean, we worked in a close like hallway, just us, like with a couple other people. And I was like, all right, I got to find an exit. So went and did that but along the lines. And when I went to work with this smaller firm, learned a tremendous amount, but I was upfront with him and I said, hey, this is a temporary stop for me. My long-term plan is to go into business with Micah and Tyler. They just ramped up and crushed it in a 2-year space. And they were kind of echoing what Micah said earlier. Was Tyler was like, we need to go get Drew because like this is getting to be where it's like too much for just us and then the two people they had at the time, and that are still on the team today. And so we talked through it, and it was more or less like, come on board, take a reduced salary from what you're accustomed to, and you're gonna
I don't think that
stay.
was the case. I don't think
That
that
was
was the
for
case.
sure. And so it was more of a
salary and more stress.
it was yeah, I mean that's kind of along the lines of the agreement, right? So it was a combination of a reduced salary, a fixed salary for a 3-year period, and in that 3-year period get to a certain book of business that was directly attributable to my relationships. So obviously manage a bunch of work that they do, review a bunch of work, do a bunch of work that we all three, because in theory now it's a third, a third, a third. We don't keep track of who's doing what business wise. Like I mean, you can listen to Micah talk like that. He's really good at generating business. And I think Tyler is as well. I mean, all three of us can talk and communicate and build relationships, but they're the first ones to come to me and say, hey, I have a tax return that I need done that's like pretty complex. And I'm the guy that jumps in and does it, which I'm fine. I love that.
Yeah.
And so we all have good roles, but all that being said, like it was a 3-year kind of fixed thing, and then also build to a book of recurring annual revenue attributable to your relationship. So that was really the only time, and I kept my own Excel workbook outside of our project management, and was just like every time I'd have a new meeting and I'd book someone and they'd sign an engagement letter, I'd be like, sweet, that's like a little bit closer. And so like that was I probably hit that goal 18 to 20 months in.
Yeah, it was
right.
well before the 3 years.
And I laugh with Micah because like I would like someone would come in and I'd take a new client meeting and I'd be like, yeah, we could go a little bit below our minimums. And like now, like forward thinking, I'm like, gosh, wish I would have stuck to our minimum price for some of these people. Like I'm like, had I known, had I had the the foresight to be like, yeah, well, I was gonna hit it in 18 months, I'd have been like, hey, you know what, we're gonna be, this is our minimum, like this is what we do. And but that is how we structured that. And we have different things kind of set up in place for like future potential partners. And
but it's not for everyone. I mean, Jen, the way we did it, like our Kevin Kane is a business, but also like a state planning attorney, and is technically the sharpest person. Like that threw him for such a loop that we did it that way. And then we don't, not to give too much, but and people may say we're crazy. The firm we were all three at a point. In their core, there was dysfunction amongst how people utilize staff, their books of business, collections, and it created rubs for the three of them. Like they just weren't a forward moving machine like they could have been. And so this model of us, I mean, I don't know this. I have zero idea what my relationship block of business. I know what we do in total for revenue for the year, but at the end of it, the three of us are a third. And so it helps us to be, I know we're getting off topic, but it helps us stay what's good for the firm is good for everyone. And there's not individualized. Yeah, there may be projects that get prioritized, but there's like, we make decisions on what impacts the 20 people that are here. And that's how we go forward, and we treat it as equal, and it's helped us. And we had someone else that started that path with us, and and still one of my closest friends, and he's no longer with us because that path wasn't going to work for him, and he didn't want to do it that way. But for us, it proves you're in it. Like you're going to sweat and you're going to push and you're going to sacrifice a little bit, and then we're not asking you for a check. We don't. It's not the way and it didn't work for him, and it was probably the only time I've been really like disappointed in a situation in having this practice, because I just care for him. We all do, and we wanted it to work, and it just didn't work. And so we moved on, and we're still friends now. And but I think his due diligence of us wasn't enough, because we were very adamant that that's how it's going to work, and we think you'd be great, and we want you to be here, and we'll shift to 25% each. That's fine, but you got to do these things, and they wasn't willing, and that's fine. It didn't work out. But I think, really truly understanding a business and its culture and what its objectives are when you buy and or sell is huge. It's probably bigger than the numbers part of it, in my opinion. That's my opinion.
Yeah, I agree with you. I also think what you've mentioned here, like knowing before you get into business with somebody, if you're going to set up a partnership in any form, like knowing, first of all, are there actually benefits to going into business with this person, or should somebody be the owner and then there's somebody like working under them? But having that, it's kind of its own little accounting system, right? Is in that, like, do my assets complement your assets? Are we going to butt heads in any way? Do our working styles go well together? Are you really outgoing that I'm behind the scenes? Like those kind of things are all things that need to be taken into account if you're considering buying a business or going into business with somebody. And
That's a great
probably
point.
the most
Yeah.
important out of any of
I
it.
mean, I had one. They were in business for. I can think of two gentlemen that like they worked together in corporate America, and they were like, "This is going to be great. We're going to do this. We got a kind of market that we've already like acquired, in the area." And not a year later, we did the first partnership return, and they were all on the same page. And all of a sudden, it was like 6 months later, like the woman who was doing the administrative work was like, "Hey, Drew, how do I dissolve this company?" I'm like, "Dissolve." But then like the writing on the wall, as I started to like listen and remember some of their conversations, like it was probably that like too many chiefs, not what's the like too many headed whatever.
Yeah.
I don't.
Too many chiefs, not enough Indians. Is
Yeah,
that
something like that.
That's
the
it.
Yeah, and I just remember like laughing, like, oh, you know what? I probably could have seen that coming had I thought about that a little more. But
hmm
yeah,
Hindsight's always 2020, right?
yeah.
Those things. Okay. Well, any other lasting advice that you need to give to anybody that's wanting to buy or sell a business?
I think the only other thing that I think about, and is the logistics of buying, like what you're buying, and defining that, because and everyone hopefully listening understands that. But like when you buy or sell a business, you essentially are allocating that sales or purchase price across asset classes. If you're selling, your what you want those asset classes to be is more, it affects you immediately because that dictates what's due on that transaction and selling. So I think being transparent on the front end of what your expectation, if you're buying, a business that's heavy equipment or machinery, a lot of it's going to be, equipment derived, or that's resets your depreciation table, or is ordinary income on the recapture on the backside. So it's interesting to kind of think through that and have the foresight that if you're selling, like what's my tax charge to do that? Like, what is it going to cost me to sell this business? Because I think some people lose sight of what they've depreciated over time, or what they're physically selling, or property, whatever it is. There's a lot. So again, going back to being transparent with your advisor, Jen, and saying, hey, I want to sell, and what am I selling, and what do you think this is going to cost me to sell it? Because that may also push you to dictate what you're going to sell it for. If you're thinking you're, not going to have much tax on a transaction, and you turn around and sell a bunch of stuff, you could. So, I mean, I think having transparency of what it's going to look like to recognize a sale, or what are you buying, and how does that impact your essentially your tax filings for the next, period of time, because that will impact you going forward. So just a food for thought, but I think it's something to be mindful of.
Think it's also important to know whether you are buying the entity, like are you actually
Yeah.
purchasing the LLC or the corporation, whatever it may be, or are you just doing an asset sale or
Yep.
purchase? That's something that I think a lot of people just assume they're buying when they're buying the business, that they're like acquiring the entire thing, but that can mean a mess for you depending on if you didn't
Yeah.
do your
Yeah.
due diligence, right? If you don't know
It's a
what that
great point. It's a wonderful point.
Mhm. Drew, any comments?
I think just surround yourself with a team. Like even if it's like perspective, and you're like not sure if you want to buy or not sure if you want to sell, like I know it's hard because you some of it may end up being sunk cost, but like including a CPA, including your most valued employee, or like someone you trust in your management team internally, and including an attorney, like especially as you start to draft up documents, letter of intent, like due diligence, like keep those people. It's way better to spend, I don't know, 5 grand with an attorney to make sure everything in a buy sell agreement is right, versus doing it on paper, or doing it in Word or Rocket Lawyer, and all of a sudden you're on the back end, like you don't know what you bought, you don't know how you bought it, and all of a sudden someone else on the other side has not been fully transparent, and you're in a spot that's not great. So I would say it's worth surrounding yourself with those 2 or 3 like key people that you can bounce ideas off of, and make sure you're getting good information on the flip side.
Okay, well, thanks, guys. It was great to have you again as your second time here. I'm sure we will chat again soon at some point.
Thanks, Jen.
Thanks for having us, Jen.